Alright, so I'm going to continue with the study. Where we left off, it was somewhere around here. So this is the third session. The first session I covered, I think the buy points, or the buy points. There were three of them. The first was after this climax over here. As you see, price volume expansion. On this bar right here, you had volume off the bottom. Now, on an intraday basis, you had a lot of buying. So Climax came in, it hit this low, and all that buying came in intraday. And Wyckoff said that that was the first entry, buy long entry. Why? Because look at this volume, look at the high end close. But on an intraday basis, he saw that a significant part of this volume was on the upside. So he said that tape observers would have bought intraday. Alright, so that's done. That's buy one. So you're ready to buy the Climax. Alright. Now someone would say, "Oh, you never buy the Climax and all that, but let me show you how it really looks, realistically speaking. This leg right here on the Climax is going to look like this on an intraday basis. Alright. That point is a start, that point in the end. So imagine, okay, so you're looking at the daily on the right hand side. Imagine this is the hourly. So what happens is going down, 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 and the wave volume is going to be like, so down wave is that much, up wave is that much, down wave is that much, up wave is that much, down wave is that much, and up wave is like, so it would be like the up waves versus down waves in volume. And what you'll notice is this right here, I didn't align it correctly, but this point would be this point on the wave volume. I didn't do it nicely, but the point is this would be like the biggest volume in, like, I don't know, 15 or more than 15 waves. It would be a hell of a lot of volume right over here. So that volume on an intraday basis and that price move would tell you to buy the pullback or buy as low as you can get. So that's how it looks, and this does happen all the time. Only difference is sometimes, there's like a secondary test right here. So it might look like this, like that, or like that. It's like higher low or lower low, and then you have that buying pressure come in that goes up. Alright, so anyway, point being, that's how it's going to look on an intraday basis. And you can check charts. You're going to see this behavior. I recently saw it. I'm not sure if it was on the wheat, one of the commodities. Alright, so we covered that and then said, alright, so that's the first buy point. Where's the second buy point? The second buy point is right here. Why? Because because of multiple reasons. What are the multiple reasons? One, clustered closes right here. What is that showing? Lack of selling pressure. Second, shortening of the thrust. What is that showing? That it's hard work to make the market go down. Then lessening of volume. What is that showing? It's showing a lack of supply. Alright, so let's write those things. Clustered closes. What does he say about that? He says it shows a lack of, I think it was pressure or something. Forgot. Yeah, selling pressure. What is shortening of the thrust? Hard work to advance the market. Lessening of volume is basically saying it just helps confirm those things, but you could say it's the lessening of, it's not, he describes it in multiple ways, one of which is that buyers are not willing to buy, or sellers are not willing to sell at lower prices. So I'm going to go to the exact words because there's so much confusion on the internet and people about what is what and what does it mean. So it's better just to take a look at the source and see what the source is saying, because everything else is just bullshit or interpretation. And that's fine. It could be someone's interpretation, but it isn't Wyckoff. Alright. So I'm going to find the exact words and then map them to the behavior. First, we see panic selling. So the climax, what is the climax? Reflect is panic selling, and by climax is basically selling climax. Alright. And what is it caused by? It is caused by panic unloading of stocks by the public and other weak holders, which is matched against buying by experienced operators. The large interest in sponsors of various stocks who now either see excellent opportunity to replace, etc., etc., etc. So all he's saying is that it's panic selling. And now he doesn't say this, but it is because of a certain type of fear. That fear is called fear of loss. Fear of loss creates a mental state where you just can't handle the pain of the loss and will exit the market because it kept going lower, and eventually just break down. And anyway, so let's just stick to what he's saying. That's what he says. Selling pressure losing its force. So, clustered closes. Pressure, whatever it is, buying or selling pressure, whatever it is, losing its force. Force of the selling or force of buying is weak. Then what he says, the lower volume, alright, confirms the inference that selling pressure is losing its force. And let me just explain that. Low volume pullback. And how he compared it was he basically compared and said, okay, now it's losing its force. So you can compare the start of the pullback to the end of the pullback and see that the volume is diminishing. When the volume is diminishing, it means it's losing its force. and notice that the volume was to confirm the inference. Alright, so the clustered closes was saying that, yeah, it was losing its force. Low volume there was helping confirm the inference that was indicated by the clustered closes. Here we again have the net result of 4 days activity. No upward progress. Basically the closes are making no progress. There's no progress in the closes. And the volume, which may mean a lessening of demand. So here you have volume here is also lessening of demand, and he's using closes, the cluster closes, with the volume, and saying together like, okay, it's losing its force, or there's a lessening of demand, so on and so forth. And the confirmation, partly confirmed by shortening of the thrust. Alright, so the lessening of demand, let's call it right here. And what is that shortening of the thrust meaning? Hard work to advance the market. And what does that mean? Alright, so let's, now he's looking at the pullback, and I'll review this in a minute. So here is, look, volume on the reaction diminishes compared with volume on the rise. Basically the rally has more volume than the pullback. So here you have the low volume pullback. It's a bullish indication. Why? Because it means selling pressure is light. What other bullish indications is he looking at? Okay, so let's just review these behaviors. I'll make it really simple. Behavior and meaning. So far, he's covered Climax. What is Climax? Panic selling. What is panic selling? Panic selling by weak hands into strong hands. Okay. Clustered closes. What does it mean? It means the pressure, like selling pressure in this case, is losing its force. What helps confirm that? Volume. Volume, when it tapers off or becomes less and less, it means the pressure is losing its force. It can also mean lessening of demand. Finally, lessening of demand is partially also confirmed by the shortening of the thrust. All this means is that there are three things that go hand in hand. Alright? One is clustered closes, shortening of the thrust, and what's that other one? Low volume, diminishing volume. All these three things together what to look for in a pullback or rally. These are three basic things. Alright? Rally or pullback should be the other way around. To identify ending its end. Alright, and let's add one more. Call it abrupt volume, and this is also known as a climax. It can be a minor climax that ends a swing. Let's make it simple. Shortening the thrust, managing abrupt. So what the question now is, what do you look for in determining that the rally or pullback is ending? And the answer is these are four basic things. Clustered closes, shortening of the thrust, diminishing volume. Alright, and these three things together, the shortening of the thrust, clustered closes, shortening of the thrust, diminishing volume, all they mean together is that the pressure is losing its force. Alright, or it's being lightened, or whatever, or buyers are not willing to continue buying, or sellers are not willing to continue selling. It means it's about to end. And abrupt volume, that's like the period at the end of a sentence. End, you know, like the end. So this is what you want to do according to what he's saying. And second question is, what do you look for? What else do you look for? Alright, for the start of the move, you know, after the pullback, high and close is telling you that it's about to resume. The rally is about to resume. Okay, so what do you look for in a rally or a pullback to identify it is about to end? End And I guess these two, you could say D and E is really it's, I don't know how else to say it. The move or I don't know how else to say it, but for the move to resume, what do you look for? Minor climax and high end closes. These are some evidences. The minor climax is going to terminate the move. High end close will give you an indication that the move is about, that the pullback is done and the rally is going to continue. So these are just some things here. You could probably word it better than I do, but it's late and I don't want to go through too much. Alright, let's continue. It says now, after that, you have 4 days. It's 1, 2, 3, 4. He's talking about this leg up right now. So before I do that, I just want to again go over this. The first buy point is here, off the lows, intraday, and it goes up, goes down. The market here is very important that understand the market is on a springboard. It's on a springboard because the zone of support has widened. There is a lack of selling pressure as indicated by the 3 clustered closes right here, the tapering volume. What else? The shortening of the thrust. So those 3 go hand in hand. Other than that, the evidence of the move is about to be resumed is right there. He doesn't talk about this, but you can infer it from just the way he's explaining other things and other swings. Right there, what you notice is that if little effort reward bar or whatever you want to call it, I call it minor climax, but because on an intraday basis, that little pullback is actually like an hourly trend. So, however you want to see it, call it effort reward, whatever it is. That right there is abrupt volume. Those were his terms. And that is terminating the move. So again, clusters closes, shortening the thrust, tapering volume, and terminating of the move. And after that, bang, right there, it happens. And then, so that's the springboard, and then there's a new high right there, so it's a buy. And over here, the market again gives what? Those 3 indications. One of which is clustered closes, other is shortening of the thrust, 3 is tapering of the volume, 4th is bang, the buying climax right up here. And again, these are climaxes at a swing level, not the fucking trend level like everybody thinks. And they terminate the trend up, or the swing up, and then after that, market pulls back. Again, what do you look for? Look for a shortening of the thrust, blah blah blah, and instead what you do get is a minor climax, bigger volume than 1, 2, 3, 4, last 4 bars, and immediately has a green close, which is high end, giving you what type of indication? A continuation indication. That's what the price and volume is saying. The other thing is it had a higher low with lower volume. Higher low, higher high with lower volume. So what are the 2, 3, I guess you could say 3 bullish indications. One was the climax. That's more of like terminating the existing move. And now the continuation is the high and close. The higher high, higher low with less volume that totally dried up. And And this bar is also extremely bullish, given that background. So what you're looking for in all cases in a swing are clustered closes, shortening of thrust, tapering volume, that altogether they will tell you that buyers are not willing to buy at higher prices, or sellers are not willing to sell lower prices, which means that buying pressure is waning and selling pressure is waning. Now for the resumption, you're looking for that high-end close right there. One may say, oh, what about over here? Well, this was a low-end close, right? This is a high-end close. Nah. I mean, it's definitely progress in the close. Alright, so now we're over here with the 4 days. 1, 2, 3, 4. Now, what does he have to say about that? The following 4 days, in each of which we see higher highs and higher lows and higher closes, accompanied by gradual increasing in volume. Again, what is the bullish indication? That you see this pattern of buying higher volume, higher volume, higher volume, higher volume. That is very bullish. Why? Because buyers are chasing higher prices. What does that mean? It means that it's bullish behavior. Why? Because they're willing to buy at more expensive prices. There's no lack of demand. There's no lessening of demand. In fact, there's increasing of demand. So following 4 days in which each all that higher stuff, highs, lows, closes, accompanied by gradual, not abrupt. A big difference between gradual increasing volume and abrupt volume. Abrupt volume can terminate the move. Gradual increasing volume is not really meant for terminating the move. It shows that there is buyers consistent buying at higher prices in a gradual, not an abrupt way. And that is bullish behavior. So again, that's very important to note. This brings the market up with a fraction of the high figure. Volume surge after 4 days, almost perpendicular advance, warns us of a buying climax. What is he talking about? I think he's talking about this bar right there. So he's saying that a volume surge after 4 days of almost a perpendicular advance, perpendicular meaning straight up, warns us of a buying climax. These are his words, buying climax on a swing. Alright, but here in any case we may expect hesitation because of a prior top resistance. We may expect hesitation. Why? Because longs were trapped up here, as indicated by the high volume and the new high that led to a low end close. So all those buyers, all that volume stuck up here wants to get out. So when price goes back to that level, you can expect hesitation because trapped buyers want to get out, break even. Alright. Now observe the next 13 sessions. A very narrow range for the average. This is because absorption. 13 sessions, he's talking about this thing right here at this prior high. Why is this absorption? We'll get into that. These are over anxious bulls get in here. They want to exit. So for 13 days it's doing a lot of things, one of which is to absorb their selling to break even. So these guys are trapped. They want to get out, break even. So as soon as price goes there, they say, okay, let me get out. I'm back to zero. Sell, 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 sell. And someone else is taking the other side of buying that sale. So they want to get out even. Okay, absorption is completed. When is it completed? It's completed on February 9th. I can't really read this. This is something, I don't know, one of these bars here. So when after closing almost at the top of the previous Saturday and advanced to new high 165.8 a quarter. Alright, so what is he saying? The new high. Alright, the new high means absorption is done. Now the speed has increased. What is he talking about? Speed. He's talking about going straight up. The average gains 9 points in 2 sessions. The markup forecast by item 3 in the footnote below. We'll go there later. See how the volume increases to 4 million shares in over these 2 days compared with previous volume of 1 million to 2 million. All he's saying is, oh, look at this, 1 million, 2 million right here. And now, bang, look at that, 4 million, bang, almost 5 million. You see how it's increasing? See how that volume is spiking? This is exceptional. So this exceptionally large volume plus the failure to record any material gain on the high volume on the 11th as usual is an indication of some distribution and a setback. What is he saying here? Well, he's saying that you have all this volume here that causes this much progress. You have this much volume that's even more volume that still causes progress. Then you have this much volume which is almost the same, which doesn't cause almost any progress, meaning the closes are clustered. What does that mean? It means there's some distribution. Okay, now this is very important because this is preliminary distribution. Alright, and the second thing to note is there's no box. Do you see any point and figure box? There's no point and figure box. Alright, so this idea that there always must exist a box at the bottom or at the top of a trend is fake. You know, right here distribution is done, some distribution is done in a day. That's 1 day. And there is preliminary distribution. Or according to what he says, the exceptionally large volume on the 10th and 11th plus the failure to record any material further gain on the high volume on the 11th as usual is an indication of some distribution. No failure to record any further gain on high volume on the 11th. So all that volume but not a lot of gain. Not a lot of gain is what? Is evidence of some distribution. And a setback. Does that mean that's final distribution? No. But it means that, you know, if they have 1 million shares, that maybe half of it is sold. Alright, on, and I'm just using that as an example. Obviously, this is in the 5 and 4 or 5 millions. Alright, on the 11th, the average makes a high of 1 point. Right. So what is the cause of the clustered close? Why is the cause, let's say this, what's causing the clustered close? Well, if you have a lot of volume and you're not making a lot of upside progress in an uptrend, it means that supply is starting to overcome demand because the volume is too high for there to be a lack of progress, progress in the closes. If they have high volume, then you should have progress. The closes should make a lot of progress. That would mean demand is still very strong. But in this case, it means supply is starting to overcome demand. And these are preliminary warnings. It doesn't mean that it's the end of the move, but it does mean that the start of the end. I think that's a better way of saying the start of the end, because there's preliminary distribution. Or as he says, some distribution is occurring. Now, as we watch the supporting points of the last 5 sessions, we find that they're all around the 160, 162 mark. Meanwhile, volume decreases promptly on the dip to 160. So even though there's some distribution, you will see that the volume starts decreasing while you're watching the supporting points. And as it dips, look, big, less, even less, right? So that move where it goes down on less volume is still bullish. Even though there's some distribution, that little move here is still bullish. But when he talks about the supporting points, he means the lows. Alright, we find that they're all around lows in the pullback, meaning the bars in the pullback. Alright, meanwhile, volume decreases promptly. So what is he saying? As the market goes down, does the volume increase? No, it decreases. This says there's another advance coming. So how do you know another advance is coming? Well, in this case, you have an uptrend and it pulls back on lower volume. That lower volume is telling you, if you can infer now, that okay, maybe there's a lack of selling pressure. What factors do you want to take a look at? Closes. Is there a lot of progress in the closes? No. Is the volume tapering off? Yes. Is there shortening of the thrust? Yes. What's all of that point to? Points to continuation. Looking for a high-end close. Yes. Not really. Not that much of a high-end, but you know, it would be nice if you had like terminated through a Climax, but it's not the case this time. Anyway, the low volume dip though is so low that it's telling you that there's another advance coming. The market is not ready to turn downward yet, even though there's been distribution, preliminary distribution. On the 17th, there's an attempt to run the average up to a new high, which fails. The closing is almost on the bottom, and volume increases notably after that of 3 previous sessions. It looks like as if this may be a buying climax. What's he talking about? I don't know what the hell he's talking about. 15, 16, 17. Okay, I think maybe it's this right here, and it gets rejected. Now he's saying, alright, let's consider the whole thing. We have had a substantial advance, lack of progress, high volume. We have high volume and this lack of advance. It means sellers are overtaking the buyers. And in this case, reached a critical position. Why? Because sellers are reaching the buyers after a significant advance. And they like to sell high. Alright. Here's the idea of rallying from a possible danger zone. Alright. So when it goes up, it goes down. Immediately, it goes up. So this right here was danger, but it had no follow through. So it rallied away. Alright, so here's now, it goes ding 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 bang right up there. Alright, and what is important about this day? What's important, we now become very suspicious of this advance on such large volume, and particularly the failure to hold a quick upthrust. This is how Wyckoff talks about an upthrust. This is not the way Evans talk about an upthrust. They talk about an upthrust as a range, and the upthrust is just a slight penetration of support of resistance. But the way Wyckoff used the term here is just as it's a thrust going up to a new high. That right there is an upthrust. Again, there's differences between the terminology here. Over here it says that we become suspicious. Why do we become suspicious of this advance? Because you have exceptionally large volume and it is unable to do what? To hold. Because right there is no follow through. Alright? It is apparent that on the next day, right after the high volume bar, right after what happens? It is unable to hold. If it's unable to hold right after such a high volume bar into a new high, that quote unquote upthrust is distribution. Or at least what he says here is climactic, which is a characteristic of distribution. So that bar with high volume is unable to hold because the next day you have a red bar. What is that a characteristic of? It's a characteristic of distribution. That bar itself, there's no fancy range with phase A, B, C, D. All of that is right there is distribution. So what he says is, next day we observe a lower high and low and close, as well as the loss of 2 prior days gains. So what is he looking for? How much this bar here that was unable to hold, because of that upthrust, its close is less than prior 2 days. So 2 days of gains are lost. After such a prolonged rise, we may expect a more substantial reaction and perhaps an important decline because there have been evidences of distribution as far back in February. So where did he talk about distribution? He talked about distribution here on this bar on the quick upthrust because it was unable to hold, and the bar after it took out 2 prior day closes, meaning its close was less than yesterday and the day before. Alright, and you have indication of distribution here. Why? Because you have a lot of high volume and you have clustered closes, meaning lack of progress in a close with very high volume, telling you what? Supply is overcoming demand. It doesn't mean the trend is going to change just yet, because when it pulled back, the dip dried on volume. So that was a bullish indication in an uptrend, telling you another advance is coming. And then that second advance is where the rest of the distribution occurred. So 2 spots, one here on the quick upthrust to a new high, which was the high of the trend, and before it right here, which is the cluster close with high volume. Alright, cluster close with high volume, evidence of distribution. Quick upthrust with high volume, also evidence of distribution, especially if the following day has no follow through and takes out multiple days closes, prior days close and the day before it's closed, etc. Alright, I'm going to stop right here. You definitely want to go read the study after watching this video, simply because you might change the way you look at Wyckoff. And this first study is like a landmark study because in my opinion it has almost all the key behaviors. I would say I think it does have all the key behaviors that you really need to know. Alright, take care, bye.